This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hey team, we have a new sponsor here at the Crypto Conversation, BitGet, one of the world's leading copy trading cryptocurrency exchanges. Yes, indeed. What happens if you've got the funds to invest, but you don't have the time to keep track of the market? You still want to make smart money moves. What do you do? Well, copy trading is a popular choice for beginner traders. You can shorten your learning curve by uncovering tips and strategies from more experienced traders. BitGet's copy trading platform has over 80,000 elite traders to choose from and 380,000 followers just like yourself who are already using the BitGet copy trading platform as a potential passive income stream. All it takes is one click. You can subscribe to an elite, profitable strategist, set your limits, automate your orders, and monitor their trades. I've got some links in the show notes below. One link will take you through to the BitGet sign-up page, give you a VIP discount. So learn all about it for yourself thanks to BitGet. And now it is on with the show. My guest today is Marc Taverner. Marc is the CEO and co-founder of XEROF, a financial services provider bringing Swiss precision to crypto assets. I like it. Hey, welcome to the show, Marc.
Thanks, Andy. Pleasure to be here.
Let's do what we do at the beginning of the show. I'd love to hear just a little bit of your personal and professional backstory. What has led you to where we are today, Marc?
Wow. Okay, Andy, I'll be super brief.
Sure.
So fresh out of university, I founded a fax modem distribution business. So this is back in 92. And the reason I founded that business was because I saw the potential for what we now know as the internet. Back then, we didn't call it the internet. It was a bunch of bulletin boards and various other gatherings of individuals using technology to communicate. And many of my friends chastised me, questioned me, and asked me the question, why do you want to try and build a business that sends faxes to people? They just didn't get the vision that I'd seen about the power of the internet. So I launched myself into that business using my credit card to buy stocks, smiling and dialing every day, and selling those fax modems I was buying into small companies that were popping them into PCs so that individuals could join these bulletin boards and start exchanging ideas, content, and discussions between each other. And the reason I did that was because, as I said, I saw the power of the applications that could be built on top of the internet for basic things that we really take for granted now, like estate agents being able to show pictures of property to geographically dispersed audiences and all the rest of it. And from that foundation, I became hooked on the application of technology. Shortly after that, I joined what went on to become the world's largest conference call company. I spent nearly 15 years with that management team building that business, where we were realizing the vision of an application on top of the internet, which was the ability for people to collaborate with each other across distance, not just in audio, but in video, and using documents as well to work real time in a collaborative way. And it was during that journey that Bitcoin came on my radar. So I retired from corporate life and a knock came on my door one day where the question was, have you heard of Bitcoin? Which I had. And in 2014, I jumped with both feet into the world of blockchain and Bitcoin and began working with what became one of the world's largest Bitcoin miners. And then from there, you could say, I got the Bitcoin, crypto, and blockchain bug. So there's just a little potted history, Andy, to speak to your question.
Yes, thank you very much. Yeah, and that was Bitfury Mining that you were with for a while, wasn't it?
Yeah, that's right.
And so we'll bring us up to date then, Marc. So XEROF then, give us, I guess, a little bit of background. Love to just hear the brief origin story and the vision for XEROF.
Yeah, super. Well, the origin of XEROF really, I guess it has its foundation in the role that I took after I left Bitfury when I went to become the founding CEO of a trade association supported by the European Commission whose role was to act as a bridge between the blockchain industry and governments who were developing regulation. And at the time, the European Commission, the European Parliament were just talking about a piece of regulation that's now quite well known called the Marketing Crypto Assets Regulatory Package, or MiCA, as it's known. And I did 2.5 years working, translating the requirements of about 170 blockchain companies that we had as members into language that the governments and regulators could understand, and vice versa. And around about that point, I was having a conversation with Nick Tigrintakis, my co-founder at XEROF, and we suddenly realized that there was a real need for corporations, individuals, and high net worths who had exposure to crypto assets, but wanted that bridge back to traditional finance, and vice versa. And that friction point was immense, to the point where both myself and Nick, my co-founder at XEROF, were having to wait sometimes up to 6 months to be able to open accounts with institutions and organizations who were providing that bridging service in a compliant way. So we saw a real space in the market for a company, and this is how we founded XEROF, to lead with a compliance and regulation first approach to deliver professional services that remove the friction between traditional finance and crypto assets in a compliant, professional, and precise way. And you could say that the nucleus of the idea that started XEROF really hit us front and center between the eyes. During that period, I spent working in ATBA, the International Association of Trusted Blockchain Applications, and helping to do that translation between the blockchain industry, government, and regulators. We just saw that the friction points were not going away, but we saw the importance of regulation was gathering pace. And therefore, we understood that to try and address some of those frustrations that existed between the innovators and those institutions who wanted to gain access and exposure to this marketplace, the timing was kind of right to launch XEROF.
Yeah, very good. And so headquartered in Switzerland, hence the Swiss precision tagline. Explain a little bit about, I suppose, your separate or related target audiences, really. Who is XEROF aimed at? And are these different users primarily in Europe, I presume?
They can be in Europe, or they can be worldwide, Andy. You know, the thing about the crypto asset business is it's truly global.
Yes.
You back to the example I gave you of the fax modem business. I saw the opportunity for services to roll out on a global basis. So our customer base, operating, as you quite rightly say, from our base, our proud base in Switzerland, where we're licensed and where we have a real business with real people in real offices, is to service high net worth individuals, businesses, and corporates who need a solution that simply works. So we provide that bridge between the world of traditional finance and crypto assets. And some examples of the types of services that we deliver to those audiences could be cross-border payments. So we work with quite a large number of businesses who have a need, perhaps because they're commodity traders or they work in supply chain. And their need is to be able to make payments to their suppliers and customers very quickly for low fees, and sidestepping some of those traditional frictions that exist in the regular world of banking. So we operate a process whereby, to satisfy those cross-border payment requirements for commodity traders or supply chain businesses, we might receive a relatively large amount of incoming fiat, that is a government-backed currency such as US dollars, and exchange that into a stable coin like tether, USDT, so that the customer can then use that USDT, tether, to pay their suppliers and customers super quickly without any friction at massively reduced fees, and thereby increase the velocity of the cash, of the capital that they're using, which is majorly important for commodity traders and supply chain businesses. The quicker they can move their capital around, the quicker they can deploy it, and the greater returns they can create. So there's one example. I'll give you just 2 or 3 more, if that's okay, Andy.
Of course.
Super. So the very essence of when we started XEROF was to try and remove some of those frictions. And we saw high net worths, particularly crypto high net worth holders, who were very interested in this notion of diversifying their portfolio. And we noticed that many of these high net worth crypto holders were interested in buying real estate, whether it was real estate for their family to use as a holiday home, or whether it was real estate in another geography so that they could gain access to golden visas or whatever the purpose might be. So we've also set up an application whereby we can allow real estate agents to strike a contract with a high net worth holder of crypto. And the contract of sale can be based in, for example, euros. But once the contract is agreed, we go to the high net worth holder of crypto who wishes to buy the property. We take the required amount of crypto from that holder, and we exchange that into euros so that the euros can then be sent to either the property owner or a third party. That could be a notary, or it could be a solicitor who is involved in the property transaction, and thereby use those euros to settle the contract. So in that example, we're supporting the purchase of real estate using crypto, but utilizing our Swiss licensed service and very compliant service to do the exchange from crypto into fiat, in the example I've given you, euros, so that the contract can be satisfied in euros. So that's the second example. The third example might be for Web3 companies, of which you know from all of the work that you're doing yourself, there are quite a good number now. And those Web3 companies have one commonality, which is typically they've raised a large amount of treasury in some form of crypto. And they hold this treasury either in their own native token or in other cryptocurrencies. But periodically, they need access to fiat, whether it's US dollars, whether it's euros, or whatever the currency may be. And the reason they need that fiat is to satisfy their burn rate, or otherwise known as be able to pay their operational costs. So we work with Web3 companies who periodically wish to take a certain amount of their treasury in crypto, convert it into a fiat currency, and need to have that done in a professional, compliant, and very speedy manner so that they can fund their burn rate or pay their operational costs, such as payroll and supplier invoices. And then the fourth and final example I'll give you is where we support institutions. You would expect with our Swiss base that we pay a lot of attention to asset managers, family offices, and these types of institutions are increasingly having a real interest in gaining exposure to the crypto asset market. So for this audience, we've developed a solution that is called an AMC, an active managed certificate. And in very short form, Andy, what this allows those institutions to do is to take a placement in US dollars in this certificate, to receive an INIS number, which is a number that is referencing this as a proper financial product. It gives it a Bloomberg ticker symbol. And more importantly, it allows the asset manager to recognize whatever placement they make in certificate as assets under management. Now, the way we then give them exposure to the underlying asset, which is Bitcoin, in the example of our certificate, is if they place, for example, 500,000 US dollars into this certificate, we take those $500,000 and we buy Bitcoin. That Bitcoin we put in the custody of a Swiss private bank, and those $500,000 therefore track those Bitcoin and the performance of Bitcoin directly on a one-to-one basis. So what that solution allows the asset managers to do is, on behalf of their customers, create exposure to the underlying asset without needing to take custody of the underlying asset, but also allows the asset manager to recognize the placement and exposure to Bitcoin as still assets under management. And that's a very big point of difference, because the other way to gain exposure to those Bitcoins would be to buy them directly and take possession of them. Now, that's quite cumbersome, has quite onerous obligations around custody, but also it takes the assets under management out of the asset manager's basket, which is not something that they really like doing. So there are four examples, Andy, of the use cases that we have been deploying and some of the target audiences that we've been satisfying with those services.
Got it. Fantastic. Thank you, Mark. And look, it's an interesting time across the digital asset space at the moment. I suppose fair to say that we're still in another crypto bear market, but that won't necessarily deter the likes of the various Web3 companies that work with XEROF that are obviously crypto native. But just curious, Mark, any sort of metrics or anecdotes perhaps that you can share in terms of what do you gauge in terms of kind of, I suppose, even just market sentiment from not necessarily just your clients, but prospective clients? Do you still have, new potential clients knocking on your door that are perhaps looking to do business or seek exposure or something like that, even in the bear market?
Super interesting question, Andy. So let me answer that with, I guess, two points of reference. The first point of reference is the obvious one, which is that, yes, we're in a bear market, as you said. And how do you determine whether it's a bear market or not? Well, the underlying barometer is often used as the price of Bitcoin. So we see the price of Bitcoin, if we can accept that as the general barometer of the market, as hovering, somewhere between 25, 27, 28,000 US dollars, as opposed to the 70,000 that we saw at the peak, the highest point. So that gap certainly indicates that there is perhaps some sentiment that is, best neutral, because the price at between 25 to, let's say, 29 or even 30 is a significant gap between that 25, 29, 30 and 70, where it used to be. So what that is doing for those holders of coin, for that part of the market, is suggesting that perhaps those holders of coin don't want to sell. Perhaps those that are interested in getting involved in the market might not think that the time is right now, though, you could argue that when the price is low, the time is perhaps better to get involved than perhaps when the price is rising or higher. But notwithstanding, Bitcoin still accounts for a large amount of the sentiment in the market until such time as we see, in my personal opinion, a sustained upward trajectory of pricing. We will still have, at best, neutral sentiment in the market. And that does impact our business in the same way as it impacts every other business. As I mentioned earlier, it might mean that certain holders of coins are somewhat reticent to realize the value in those coins and thereby perhaps not be so inclined to buy as much property in the use case I gave you earlier, or exchange their coins from crypto into fiat. But we are seeing on the reverse of that discussion or that point, we are seeing more institutions, family offices and high net worth individuals in the fiat world show interest in gaining exposure to crypto assets because they believe that the price point is such that they will be able to make some profit once the price increases. But notwithstanding, the general sentiment of what I would call the crypto market is at best neutral right now. On the other side, sorry, Andy, go ahead.
No, that's all right. Please, on the other side, Mark.
Thanks, Andy. On the other side, I was going to draw reference to stablecoins. And it might sound a bit perverse for me to say that I don't view these in the same basket as cryptocurrencies, because the very essence of how they're built, the technology on which they exist, is the underlying blockchain technology, which you could call crypto. But I just want to make a point of differentiation around the use case. Whereas crypto might be regarded as somewhat speculative if you talk about Bitcoin, stablecoins have, what we see from XEROF's perspective, an increasing amount of utility about them. And I go back to the example I gave you of cross-border payments, international settlements. And that's where we're seeing particularly strong growth at the moment, despite the fact that the price of Bitcoin is, arguably not where everybody would like it to be. And therefore, perhaps we have a bull market on that side. With the utility that stablecoins deliver, we're seeing a definite uptick in business from those organizations that are a bit more open-minded in the traditional world and are seeing the potential for stablecoins to allow them to run lightning fast and reduced fee payment settlements, international payments between their supply chain members, customers, and whomever else it might be who is willing to come with them on this journey. So there's kind of two very distinct ways that we tend to look at the market at XEROF, as I just explained to you.
Very good, very good. And I suppose it'd be remiss if we didn't talk, potential catalysts or things that have the potential to shift the narrative and improve market sentiment. I suppose I'm really thinking of two things. I'm sure you can guess what they are, Mark, but I'm talking about the upcoming Bitcoin halving and the much anticipated various Bitcoin spot ETF applications that may or may not be approved or denied all at once. I think January 10 is the final deadline or something like that.
Yeah, the new final deadline, isn't it, Andy?
Yeah.
Yeah, look, you raised two really good points, both of which could drive sentiment. The ETFs, who knows what's going to happen there, because a lot of that discussion is taking place in the US, and the US, as we know from a regulatory perspective and a political perspective, is something which is very hard to unpick and determine what's going to happen and when it's going to happen. So on that side, should ETFs gain approval, then I think the sentiment that will bring will definitely be positive, in my personal opinion. But when that may happen, I'm entirely unsure. The Bitcoin halving, on the other side of the coin, if you pardon the pun, very deliberate pun, is a known date, or at least a known target date. And what we see here, if we draw on history, is that each time the halving happens, and there have been 3 so far, so this will be the 4th, each time the Bitcoin halving happens, over a period of some 8 to 18 months after the Bitcoin halving, typically we see a sustained increase in the value of Bitcoin. And that is simply because the amount of Bitcoin which is being produced on a daily basis reduces by 50%. And the general assumption at a very macro level is that, assuming the demand which is supporting the price, today's price, let's say it's 27,000. So if the halving were to happen today, the demand that's supporting that price of 27,000 US dollars does not simply disappear, but the supply is halved. And therefore there is still the same amount of demand chasing a reduced supply. That's the very basic summary of the Bitcoin halving argument to support an uptick in price. But it doesn't happen immediately, because there are all sorts of pressures that need to play out, not least of which is that the miners who support the Bitcoin blockchain will have their revenue immediately reduced by 50%. And any business that is going to see that happen overnight is most definitely going to face some challenges. And that's why there typically tends to be a delay with the last 3 Bitcoin halvings, until such time as you see how the market stabilizes, and then typically, in the past, historically, over the last 3 halvings, the price has gently increased or less gently increased over a delayed period of time, as I said, between some 8 to 18 months after the halving. So I do hope that we see the same pattern this time around, because it will certainly help market sentiment. But as we all know, historical data is no indicator, no guaranteed indicator of future performance, but at least we do have some data points that we can base some modeling around. So I hope that when we see the halving, approximately April 2024, that we should see the Bitcoin price start to rise. And because the Bitcoin token or coin is so influential on the total market, hopefully that will help everyone who is an innovator in this space receive a little bit of breathing space and benefit from a general uptick in pricing. But nothing is guaranteed. No,
that's very well said. Nothing guaranteed. It'll be absolutely fascinating to watch how this plays out. There's a lot of dominoes potentially lining up, but of course, reality is never quite so smooth. You mentioned, I suppose, the regulatory environment in the US, and certainly much of us are in different parts of the world, inevitably we do take our cues from the US, but there's been some reasonably smart European crypto regulation in recent months, certainly recent years. I see seems to be a growing call in different parts of the UK for the UK to potentially put their hand up as a crypto asset hub, an innovation hub, with I suppose the Biden administration not being necessarily overtly negative towards crypto, but certain parts of the Biden administration perhaps coming across that way. And you just see the likes of even Coinbase at one point were so disillusioned they, I think, even considered, maybe just as a kind of more a social signal, and I'm not sure that they were serious, but they even looked at potentially moving to somewhere in Europe. Look, I guess, Mark, I'm just saying, yeah, I know you've got thoughts on this. How do you think about this?
Wow, big topic, Andy. As I mentioned earlier in the introduction, I spent 2.5 years of my life, mostly through lockdown, translating the voice of the industry to the voice of the European Commission, European Parliament, and vice versa. So you mentioned Europe in your opening statement there, and I think you cited it as not a too bad regulatory framework, and I think that's a pretty good description. It's okay, but it's not brilliant, and it could have been so much better. The regulatory at a macro level, my personal view on the regulatory framework right now is that a vast amount of effort and investment of time is going into regulatory considerations for stablecoins. And, I can kind of understand that, because if we go back to MiCA, the Marketing Crypto Assets regulatory framework that spans across all 27 member states in Europe, plus 3 extra states that in total form part of the European Economic Activity Area, the essence of MiCA began as a response to Facebook's then Libra, which was a stable coin that Facebook were considering bringing out and dropping on their entire user base of nearly 3 billion people. And, that has the necessary considerations of regulators and governments, because suddenly there could be a small, albeit small, but there could be a threat to the unit of currency that is being used by governments to be able to support their citizens and deploy macroeconomic policy. So I could see the threat and the reason why MiCA was positioned as a response to Libra, and therefore governments are looking at regulatory packages first through the lens of stablecoins and how they should treat stablecoins, regulate stablecoins to ensure that they can maintain financial stability across the countries that they are put in place to govern. But my personal view is that this enormous focus on stablecoins is at the cost of the more innovative and perhaps wider Web3 community, who are building applications that are potentially really, really valuable and have great utility beyond just stablecoins. So the regulatory landscape, in my opinion, is entirely and unfairly dominated by a focus on stablecoins, at the expense of some of the smaller projects that, in my opinion, have just as much utility. And these are projects that are doing things such as looking at how can the disbursement of charity payments reach the beneficiaries or the intended beneficiaries of those charitable payments more rapidly, with lower fees, and in a more transparent way that provide more accountability to the original donors about where the funds have been driven or deployed. And then other utilities that perhaps are less honorable, but around gaming, and how, for example, could gaming make use of some advancements that blockchain and crypto are able to deliver to create greater engagement, to allow the creators of those games and those value points in those games to realize those values with more powerful digital rights management protections wrapped around them for the innovators and creators. And then you could take that off into the world of music as well and look at how Many blockchain projects have tried but failed so far to gain massive traction in understanding how blockchain technologies, together with some elements of crypto, could be used to reduce the friction that currently exists in the world of music around digital rights management, and provide greater transparency to those artists, to those creators who make a living from creating these pieces of music, or even more widely pieces of art, but who don't receive all the royalty payments that they believe they should, because there are vast numbers of intermediaries at best, or at worst, there are vast numbers of intermediaries who are using opacity to take a larger share of their fee than is fair, in the view of the artists, for them to have. So these types of use cases, these types of applications, which are more broadly Web3, are, in my opinion, suffering because the entire focus of the regulatory machine is around wider topics such as stablecoins. And if a government like the UK government that you mentioned earlier could get beyond looking at just the pure play financial applications and could understand how to harness innovation and really create a geographical location where these innovators, where these builders could build with confidence to a regulatory framework which is clear and have a set of rules that represent almost like a pilot's checklist that an aircraft pilot has, which says if you go from A to Z, you're good and you can go. That would give the ability for some of these builders, for some of these innovators to operate with confidence, with a little less operational cost and certainly less operational risk, and therefore create more rapid iterations of their innovations. And ultimately, I think the gift or the prize that's on offer for whichever geography can figure out how, whichever jurisdiction can figure out how to create this, that could be the prize on offer, which is the new Silicon Valley, but for Web3. Sorry, Andy, that was a bit of a rambling answer to your question, but in my gentle defense, you did ask me.
Indeed. All right, I like it. Thank you so much for sharing your perspectives, Mark. Look, as we finish off this part of the podcast, just to invite you to, again, make the case for why people should look at XEROF, engage your services, and if they want to learn more and look at how they can do so, what should they do? Where should they go?
Well, thanks, Andy. Really appreciate that. Why should people engage with us? We deliver services around crypto assets with Swiss precision, using our license, therefore compliance, professional, and we just make it happen. Where can people find us? So it's at XEROF.com. That's XEROF.com. And for those that can't spell or have an issue in writing things down quickly like me, if you just think of Forex backwards, that's XEROF. People can connect with me on LinkedIn. Just look for my name, Marc Taverner, or you can look for me on any of the social platforms at BlockTav. That's Block TAV. And I'd be delighted to engage, answer questions, or maybe even explain in a less rambling way what my beliefs are around regulation, why it's inhibiting growth.
Fantastic. All right, let's go to a very quick break and then we'll come back. We'll have some fun. We'll finish off by running Mark through the very famous crypto conversation hot take round. Back in 1 second.
Look, we'd all like to say we're pro traders, but the reality is we're probably not. But with BitGet, you don't have to be. Why? Because BitGet is the world's largest copy trading exchange. Instead of you muddling through it on your own, feel confident. BitGet allows you to automatically copy trade from over 80,000 elite traders with 24/7 support on our secure copy trading platform. Start following expert traders on bitget.com. Check for details in the show notes and join BitGet today.
And we are back, and I'm with Marc Taverner, who, of course, is the CEO and co-founder of XEROF, a financial services provider, bringing Swiss precision to crypto assets. Mark, I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
I'm always up for it, Andy. Shoot away.
Shoot away. I'm just going to shoot some questions at you, Mark. Now, you're a talker, so, rapid-fire hot take style answers is how we like to do it, but there's no right or wrong way to do it. Question one for you, Mark. Where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Midpoint, Andy.
On the fence, I like it. We'll take it. All right. Well, what would you say is your firmest conviction crypto opinion?
That crypto needs to be like electricity. We need to just turn the switch and watch it work rather than get obsessed with the technology and details.
Yeah, I like that. Makes perfect sense. All right. Well, look, Mark, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So look, 10 years in crypto is a long time, but Web3, DeFi, what does it start to look like in 10 years' time, do you think?
10 years' time, I'll give you my wish, Andy. I wish that we will have better educated the market. I wish there will be some sort of regulatory harmony. And I wish that there will be some sort of established technology interoperability standards. We
can but hope. All right, flip side of that is a quote by William Gibson, who famously said that the future is already here, it's just not evenly distributed. Can you think of an example of the future being here right now, but most people aren't aware of it?
Bitcoin. It's not evenly distributed. There are a very large number of large holders and a very small number of small holders, and a very low number of people that really understands what Bitcoin represents, which is the ability to send value across the internet from one point to the other without any intermediary.
Wonderfully said. And it's always strikes me, Mark, it's kind of, if Bitcoin does turn out to be, what we all hope it might do, and it certainly has the potential to be, it's just a curious fact that you and I and everyone else around at the moment are sort of alive in the decade or two that Bitcoin roars into life, and not many people really appreciate how potentially valuable a quirk of history that might be to them and their family.
And he couldn't agree with you more. I go back to what I said at the top of our conversation about why I founded my first business and what people said to me when I was busily buying and selling as many fax modems as I could. People said to me, why do you want to send faxes from one place to the other? You've got fax machines that do that. Why do you need fax modems? They just didn't get it. There's a thing called the internet that would allow, for example, a real estate agent to show a property over the internet to someone the other side of the world. And at that point in time, 1992, people just didn't get that then. It took a little time, some education, some investment of time. And now, look, if you said you were looking at a property and as a consumer, the agent couldn't show you some pictures, or at the very best, take you on a personal tour of the property using video, you just wouldn't do business with that agent, would you?
100%. And it reminds me also, a kind of another way of thinking about it is, in the 1950s or 60s, maybe you could get a pretty decent house for, I don't know, like a couple of $1,000 or $5,000 or 10 grand, whatever. And, it was realistic to be able to buy a home. But today, you used to be able to buy a Bitcoin for $10,000 or $5,000 or even $10. Right now, you can get one for, a smidge under 30 grand US. That could seem like a good deal a decade or two from now.
And indeed it could. None of us can predict the future price of Bitcoin. And again, just a nod to my compliance and PR team, who, if I didn't say that, Andy would be shooting me. I'm sure you understand and your listeners understand. But I draw reference on history. When I got involved with Bitfury, the price of BTC was about $120 US. And, at that point in time, the discussion was, how much further is it going to go, up or down? So we're still having the same discussion today. How much further will the price go, up or down? but the order of magnitude is different. Instead of talking about 120 US dollars now, we're talking about a start point of 25 or 27,000 US dollars. And the discussion is still the same. How much further up or down will it go? What's quite interesting, Andy, just to finish on the pricing topic, is if you take the price of Bitcoin from the moment it existed until today and chart a graph, you see these massive peaks and troughs. But if you draw an average straight line rule through it, you'll see that it just goes up over time. And we're all hoping that that just continues. And again, history is no indicator of future performance or guarantee of future performance. But looking back, you can see that once you even it out, the price has just been increasing. So to your question, maybe at what, 27, 30,000 US dollars as we record this today, in 5 years' time, people will looking back and going, yeah, those guys should have been bolder. They should have said it's going to hit 100. Be bold.
Be bold. Words to live by. And it brings us to our final question. Bit of a curveball, Mark. What is your favorite science fiction book, film, or TV show?
Wow, what a great question. I will go with The Deep Blue. It's a French film about diving.
Oh, fantastic. I'm not familiar with that, but I'll look that up. Sounds good.
Yep. And if you don't like it, please don't criticize me, especially on socials. It makes me feel very self-conscious.
Mark, it has been a pleasure talking to you today. Thank you so much for spending some time with us and coming on the show. Nothing else to say, really, except, again, just please feel free to shout out the XEROF website and, of course, your socials.
Thanks, Andy. It's been a real pleasure being with you today. Thanks for making the time and having me on. You can all reach me on all the socials at BlockTav or through our website, which is XEROF.com. That's XEROF.com. And if you didn't get a chance to write that down, just think of Forex backwards and you'll find us.
And even easier, there will be, of course, a link in the show notes. Hey, thank you so much, Mark. All the best and bye for now.
Thanks, Andy. Same to you.
All right, there you go. That was Marc Taverner from XEROF. Hey, that was fun. Yeah, be bold. Be bold indeed. Yeah, be bold. Words to live by. And I think that's just a nice way to end today's episode. Thanks for listening, team. Please make sure you are subscribed to the Crypto Conversation in whatever podcast app you are using. But that is it for today. This was the Crypto Conversation for Brave New Coin. See you.